Hi, good afternoon, friends. Today I have an update for a company called Tirupati Forge Ltd. It's a penny stock which hit the 5% upper circuit after announcing capex plan for a foray into the defense sector. Currently, is in the casting, forgings, and fasteners group of products. Despite the company's poor financial performance, the company plans to diversify its portfolio by entering into the defense sector with a capital worth of 67 crores. The shares of with the market cap of 405 crores hit an upper circuit of 5%. It was trading at about 34 rupees, which was nearly 5% up from the uh, previous close price. The stock has given returns of 93% in the last 1 year, probably more than that. We'll just quickly have a look at it. It seems that the stock has rallied further today. Tirupati Forge Limited is undergoing a strategic transformation amid global headwinds, particularly the challenges posed by the current US tariff regime that has impacted its export-led business, as 55% of the company's revenue dependent on foreign exports. In response, the company has realigned its growth approach, aiming for resilience and long-term value creation with a renewed focus on diversification. Is making a strategic entry into the high growth sector like defense manufacturing, an area strengthened by government support and rising domestic demand. The defense sector is experiencing strong growth backed by the government's Made in India initiative, rising budgetary support with a record of 6.8 lakh crore allocated to the Ministry of Defense. 75% of the capital procurement is reserved for domestic manufacturers. The country plans to spend $130 billion over the next 5 years to modernize its military, driving the sector's projected 13% CAGR from FY23 to FY30. On the global front, rising geopolitical tensions and the need to rebuild weapon inventories are pushing the defense budgets higher. The global defense spending uh, is projected to reach 2,546 billion by 2028, growing at a 5% CAGR. This global upswing, combined with India's strategic focus, presents a significant opportunity for Tirupati Forge Limited to expand both locally and internationally. Has planned a capex expenditure of 67 crores to set up defense manufacturing facility. This project is expected to deliver strong financial returns with a protected asset turnover ratio of approximately 4x, highlighting efficient capital utilization. The company anticipates EBITDA margins exceeding 25%, a substantial improvement from the current margin of 14.3%, indicating strong profitability potential from its current vertical. Sorry for the background noise. The facility is set for commissioning in Q4 FY26 with a commercial production beginning in Q1 FY27. Company's overview: decades of expertise in leading Indian manufacturing of forged and machined components, operating state-of-the-art facilities spread across 5 acres, 15,000 tons per annum, and adheres to high quality standards. Is among the top suppliers of flanges in India and one of the three components to install the 630 ton Lasco press line, with 55% of its revenue coming from overseas, including markets from US, Canada, Malaysia, Europe, and Africa. Yeah, revenue part, you can go through that later. Investment disclaimer: all investment and opinions recommendations mentioned are solely those of the respective experts, broking houses, and rating agencies. The views do not reflect any personal opinion or advice. Stock market investments carry inherent risk of financial loss. Investors must exercise their own judgment and conduct proper due diligence. The author bears no responsibility for any loss resulting from decisions based on this article. It is strongly recommended to consult a qualified financial advisor before making any investment decisions. So we'll quickly go through the details. You can see here it's a 5% surge up today as well. overall 24% in the last 5 days, 18.6% value add in the last 1 month, last 6 months a negative of 32%, and over the last 1 year 102% return that the company has provided, which is amazing. Today's high is 36, 52-week high is 73, 52-week low is 14, today's low is 36.02 as well. Stock price may face volatility due to the ownership structure. The stock is at a premium valuation at this point. The company is using the assets very well. The company possesses stable growth and manageable debt, which is good. Face value 2, price to earnings ratio of 55, that is on the higher side. Book value of 8 rupees 26 paisa. Debt of 11 crores, cash of 4.5 crores. Promoter holding 49%, earnings per share 66 paise for the last 12 months. Sales growth 19.5%, return on equity 15.4%, profit growth minus 30%, and return on capital employed is 19.25%. These are the companies that we have a peer comparison: Bharat Forge, Ramakrishna Forgings, Happy Forgings, MM Forgings, Amic Forgings, LGB Forge, Kalyani Forge, Hilton Metal Forging, Samrat Forging Limited. So you can see Bharat Forge almost 60,000 pro cap, whereas Samrat Forgings 140 grow only. This is the comparison. Amic Forging return on equity of 32%, that is the highest in the industry. LBG Forge is with a negative return on investment, so that is something that we can ignore. Kalyani Forge 5.7, which is pretty low, you can ignore that. Then Hilton Metal Forging 7.23, again you can ignore this. Samrat Forging 10, you can ignore that. Bharat Forge 17.5, decent sort of return on equity. Ramakrishna Forging 16.48, again this would depend on the current price that the stock is available at, and the overall uh, you know constant. What is constant is required is the revenue growth and the profit growth, which would drive the stock value further. Important is to look at the ratio of how much returns that it has provided in the last 1, 3 to 5 years. Then public holding 51%. Again, this is going to, any negative sentiment is going to drive the stock into a oversold zone. You can see that the price will be volatile, highly volatile as well. If there is a negative sentiment on the stock, then incorporated in 2012 manufactures mass quantity, carbon steel, forged flanges, forged components, and other automotive components. Book value shows 9 rupees, stock P 54, face value 2 rupees. Then the return on equity here is showing 10% compared to 15% on the other side of Phenology. So there is a variation between the two sides. Promoter holding decreased by 10% in the last 3 years. Company hasn't paid any dividends. These are the other peer comparisons. You have AI Engineering, PTC Industries, CIE Automotive, Balu Forge, Happy Forgings, which are the other stocks that are available as a comparison. Then you can see the return on equity. AI Engineering 23%, Happy Forgings 22%, Balu Forge 31%. So these are the 3 4 companies you can have a detailed analysis. Consult a financial stockbroker, an expert who can give you the right sort of advice to either keep invested if you're already invested, or something you can consider if you wish to get a diversification stake in any of these companies. So here again you can see the sales have not has been dropped over the last 6 months. Profit has also reduced compared to the September quarter. So something that the company would need to look into. So revenue, not much of a growth, only 5% or 4% revenue growth year on year. profit, again you can see uh, about 12-13% profit, net profit growth over the last 1 year. Overall, in the last 3 years, the profit margin has gone down. You can look at the ratios. Return on equity is about 15% over a 5-year period, and the last 1 year is just 10%. Stock price growth, you can see it has been giving good returns of about 60% over the last 5 years, which is a good sign. However, last 1 year shows 93% growth, which we saw overall all is about 102%. Then compounded profit growth 21%, sales growth of only 5%. So figures are coming down compared to what it did in the last 4-5 years. Then reserves have increased, which is a very good sign over the last 1 year. Borrowings have also doubled, so which is something that the company would need to look into. They can't afford to keep a high borrowing, which would increase the cost of the interest that they need to pay. Then inventory days have reduced, which is a good sign. Debtor days remain almost the same. Days payable, slight improvement. Able to better manage payments to suppliers and creditors. Working capital days have increased by nearly 30%. So again, that is not a very great sign. Promoter holding, you can see there is a 7% reduction within the last 3 months, and that is the reason why it will create a lot of sort of a negative sentiment on the stock, based on which people investing into the stock may reconsider, as the promoters seem to lose some interest in the business compared to the uh, issue with regards to the tariffs and the exports to the US in particular. That is going to play some sort of negative sentiment overall in the future growth of this company. So capex expansion into defense manufacturing would really help the company. However, that is going to take about a year and a half to start materializing. So we look at from production to start in the first quarter of FY27, which would mean that all the the sales and the revenue part and the profit part for this year may be going in a downward trend. So an immediate trend would be a correction in the price of the stock. However, if you look at it from a long-term perspective, probably from a 2 to 3 year perspective, you may still see some returns based on how they are able to capitalize on the defense sector and what sort of growth probability that they would have. This would again be something that we need to consider probably in the results which would be declared for the year FY26. So over the next 6 to 9 months, I think somebody who wants to invest or has an interest in the company's portfolio or has this as a part of their portfolio, so definitely need to keep a track of this company on your radar. Keep reading the news and information that is published by the company, and also look at what sort of capex expansion that the company is looking into. Based on that, then they will be able to get a better idea of how the company is going to perform over a long period of time. So friends, thank you for watching. We'll connect with another video tomorrow. Please share this with your friends, family and associates, so that you all can benefit from this information. Please also suggest any changes or any improvements that can be made to the video as well as the content of the presentation. So thank you once again. Have a great week ahead.